Hi everyone, this is Jenny, and today I want to show you how to calculate incomes just like an underwriter. I have a friend that I met, and he asked how to do it. So it's very simple. If someone they get paid by 1099, you can find their Schedule C in their tax return. Just ask for the client, look for Schedule C, and all you need to focus is just three number on that tax return. So look at the number 31 on their Schedule C. That would be the income for the underwriter they're going to use. So I always focus on number 31 and take me like 2 seconds to know what I should use, what type of income, like what number I should use for this client. Another thing is you can add back the minus that they use. Let's see. So let's say their business is 10,000 miles a year. So if they every single year it will be like 26 cents or 25 cents for a mile. So if they deduct 10,000 miles in 2023, you can add that back. The reason I don't add that back when I calculate the income is because sometimes the tax and insurance, when you don't calculate it correctly, it's going to mess up the whole loan. Okay, so I see a lot of people that calculate for, let's say in Houston, every single homeowner insurance in Houston is around like $2,500 or $3,000-$4,000 a year. But I see a lot of people that only calculate for 1,000, which means your DTI is very off. If you can leave the minus from the tax return out, just in case something happened, at least you have some income to cover that gap. And it will not going to mess up your loan. It will bring it to funding. Another thing is when you look into the number 24B, okay, so if you look at this, if they deduct $1,000, the income you can use is 47,000. There is so many different type of tax return. This is for the S corporation. When you try to, because okay, if 1099, all you need is their tax return 1040. If they have an LLC, you're going to ask their CPA send to you their business tax return, and this will be the page that you can see the income. And then there will be another form, but it's very simple when you know how to do it. Hold on. Scope, income type. If you are using UWM, it's super simple for you to do calculate. When you log into portal, go to your pipeline, go click on your clients, go to in employment, and up there you can see the income calculator. Just click on there, and then you would maybe hit on edit, and will show what type of income they are going, what type of income that you are going to use. If you want use 1 year tax return, just hit just use like here on the drop down, it will be 1 year tax return. If you want to use want to do the calculator for Schedule C, or maybe the form I just showed you just now, every single one they already have the calculator in there. So just now when I show you, look on the line 31, that will be the income the underwriter going to use. The depreciation line, I don't think the client supposed to have that, because depreciation for when you own a house or something, I don't know. If on the tax return, just add all of this number and then calculate, and you will have the most accurate income that the underwriter is going to use, because this is the this is the calculator the underwriter is going to use. With the S corp, S corporation, when you okay, hold on. So with the S corporation, you see, with whatever line that you see in here, just add all the number, go to here, and you will have the income. So you don't have to be worried or stressed out how to calculate your client income, because in UWM portals they already have it for you. Just type in a number. Self-employed is super easy to work with. You know, you need to have some trick and like couple guidelines. Let's say someone who have been in the same business over 5 years, all they need to do is just provide 1 year tax return if you use 30 max, run LPA, and it's always come back with like one. You only can use 1 year tax return. If that client they just open an LLC for 2 years, you need to use 2 year average of 2 year tax return. Cannot like just provide 1 year and later the underwriter is going to ask you. So get everything that you can, and if you use LPA and the client over 5 years in the same business over 5 years, you can use 1 year tax return and use that income to qualify on the loan. If someone in the same business over 10 years and they have been getting paid like 1099 and now they switch to LLC, what kind of income, like how many years can we use? That would be 2 years. Okay, you can use 1 year, but maybe you need to provide a lot of proof, and it would be the same business. With LLC, they only go to the Secretary of State and they will know exactly what day they formed that LLC. So it's easy to see when they open that LLC. So you need to pay attention to the 1099 LLC and 5 year to your 1 year tax return or 2 years. Okay, now when you want to use, let's say this year is 2023 and April will be tax due on the 15th. Most people already pay for their tax. Want to get approved on a loan, they need to file their tax at least a month before you submit an application. The reason is sometimes it's not going to show up on their like in the IRS website. Sometimes it takes like 3 to 6 months to really get the tax transcript. So it's better for them to file their tax and pay up everything that they owe the IRS to be able to get the loan. You cannot own 20,000 and try to get a loan when you don't have that much income, because the agreement payments with the IRS, that will be the client liability. So they need to pay off all their tax. You need to plan for them how much it costs them to pay off their tax. What will be the minimum payments? What will be with the total closing cost? So at least the client know how much they should ready to be able to qualify on the loan. Sometimes they have, like, let's say a client, they have only $20,000. Can you buy $300,000 home? If you know how to calculate upfront, yes, they can. 20,000 is plenty. I just closed a loan, $220,000 value. Cash to close only 3,000 total with everything. So 10,000 is enough for someone to buy $300,000 home, but they need to pay around $10,000 or $12,000 to the IRS first. Keep all the record. I don't suggest they write a check when the CPA do tax for them, it's better for them to just submit their tax, and they need to go to irs.gov, and then make a payment or create an account and make a payment. So individual is for 1099, Schedule C, business for like an LLC, that if you own some tax, you go here. For if you own a business, if you have 1099, you go into open account from here, sign into your account, or you can make a payments. So this part, as a loan officer, I suggest you should go and play around with this and like open an account on your own and check your own tax, because everybody should have an account with IRS. I don't trust anybody, so I need to go to my tax IRS website to see how much I own, did I already pay off my tax, or anything else still left in there. Create an ID Me is super easy. Fill out the form and they will send you the link to your phone. You take picture and they will approve. And just open an account on your own and play around in there with your account, so you have the knowledge to show your client. Or if you're a client, you should make a payment right here and then keep all the record. Let's say you own $12,011, right? Make a payment. After you submit your payment from your debit card later. So after you pay from your debit card, take a snapshot or just print the receipt and keep on your computer for record. And then there will be condition to prove that if you already pay your tax or not, become underwriter, even though the tax amounts that you pay for the IRS is exactly like $12,011, but then the writer say, no, I don't believe you, I don't trust you, give me proof. And this is how you prove to the underwriter. As a loan officer, you need to guide the client how to get it. So the step-by-step I'm showing you now: file your tax, go to this website, make a payment on your own, keep all the record as the client. And then when you already have a full application with a contract, and then of course you get the underwriting condition, they are going to ask you to show proof. This is how you get proof that you already pay your tax. Let's say they want to show they want the client to show if they already pay off their tax in 2021, 2022, even though now it's 2023. It just happened to me. The loan I closed today, they asked proof that in 3 years if he still own any tax. So the client needs to sign into the account and get the tax transcript. There is 4 different tax transcripts when they sign into the account, like get your tax record and go to tax transcript. The tax transcript that to prove if you have any agreed payment with the IRS, that will be the bottom left transcript. The top one will be your tax record, just like your tax return is a record. The bottom left is where you can see auto receipt, like I already paid your. If you click on 2021, is this going to show zero balance if you don't own anything? If in 2022 you make payment with IRS $200 a month, it will show just like a bank statement, like it show everything in there, and you can download that to submit to the underwriter and your loan get approved. That's easy. These are everything talk about the condition and everything, so you need to focus on this. It's not hard at all. It's super easy. I do it all day long, so I know where to get it. A lot of people, they haven't done a lot of self-employed, but in this high rate market, most people can afford a house as self-employed borrower, because they have their business, they make money, so they can afford a house. So if you focus on self-employed. A lot of people, they don't want to do it because they think it's too hard, but I have been doing self-employed, like most of my loan, 90% is self-employed. So I already done so much to know where to get and what they're going to ask. So I prepare everything before I submit the loan or even give them pre-approval. So I hope this helped. Just now I tried to record another video, but I don't know why the screen is just like a snapshot with I am talking. Hopefully this doesn't mess up. So I hope this helped, and thanks so much for watching.